How's it going, guys? Luke here from LAGFX. I'm back with another Sunday Sessions video. Both me and James are going to go over a few pairs that we are optimistic about, that we believe we can see good potential in trading, and give you our insights and our bias. So the first pair that I'm going to be looking at today is the NZD US dollar. So that's the New Zealand dollar to the US dollar. And as you can see on screen, we have entered in already on this pair. Now, as you can see, I have a final take profit around this area. Reason being, well, this marks the previous low that was set in the market. Now, my overall bias for this pair is actually to be a seller. The market is showing bearish structure. It is bearish dominant, and therefore I want to trade with the trend and not against it. Now, just to show you that quickly, we've obviously had a very strong bullish rally, and what's followed is some lovely bearish structure. So we can see clear lower highs and lower lows being set in the market, this giving us our bias. Now, going back to the 1 hour time frame, looking at why and where we entered. The reason for my entry was there was an unmitigated area here, so this was a point of interest of mine, and I was basically wanting to see price drive up to that point, tap in, and then start this new bearish structure. And this is exactly what we've seen. So when it comes to levels of support and demand, unmitigated areas, points of interest, you are wanting to look at the last buy candle before a heavy sell-off or the last sell candle before a buy rally. Now looking here, we can see this is a bullish rally. We can see that the overall structure of this is bullish, and it's been bullish dominant. Therefore, we want to look at the last buy candle before price has basically broken previous lows within this bullish rally, which is this one. And as you can see, this is unmitigated. Price hasn't come back up to clear that liquidity, and therefore we knew that it had to come back up to this point before taking its next move down. So as you can see, price has set this low here. It's come up, cleared any remaining liquidity, and now I believe it's going to take its next leg down, breaking this previous low. Now, just to be safe, and just in case price does decide to reverse for any reason, fundamentals, or if price had other plans that we are unaware about, I have taken a partial close here for 4.5 RR. With us risking 2% per trade, this gives us a 9% return, but as we are closing half of our position, it guarantees us with 4.5%. Now I have left the rest of my position running. I have moved my stop loss to entry, ensuring that I'm using good risk management, and now I'm just going to allow the rest of my trade to play out. So with us making over 4.5% from this trade and now moving our stop loss to entry, this means we've guaranteed ourselves a profit, and then we've still got a position running that's in profit, but it's also risk-free. So there's no chance that we can lose equity from this position, which sets us in a great place for this pair. And I'd like to see price start to set new bearish structure, this low being broken, which will then in turn confirm its next leg down, but on top of that, will build confidence in those selling orders. So if you are looking to jump into this pair, I would wait for a retest or a pullback, and then I would jump straight on a sell position, and I would have this as your final target. The position that I placed had a stop loss of 7 pips and a take profit of 125 pips, giving me an overall RR of 17. And if I had held my position throughout, I could have made a lovely 34% from this trade. But as I've taken a partial already, this does lower my returns, but my returns are still very profitable. Now, moving over to the Great British Pound to the US dollar. Again, I like to look at the higher time frame, so the 1 day time frame or the week time frame, and have a look at the overall structure of the market to get my bias. We can see here that we had clear bullish structure. We then had consolidation and a possible break in that current trend, and as we can see, that has fulfilled, and we have started seeing new bearish structure being put into the market. So as of now, my bias for this pair is to sell into this market. Reason being, the current structure of the market is bearish, and we want to trade with the trend and not against it, like I mentioned earlier. Now, to get our confirmation of bearishness, we can see that this is the bearish impulse coming down, followed with a bullish retest. Now, this retest actually closed below the previous high that was set during the impulse, which confirms bearishness. The next high that it basically set was lower than the previous one, so that gives us the lower lows and the lower highs. Now we are seeing price come down. Yes, it hasn't come lower than this low here, but this is because for what I believe is there are unmitigated areas here that need to be cleared. So my thoughts are that we are going to see price come up, tap into this area, and then we will start to see its next leg down, hopefully breaking this low here. But when I look to place my position, I will wait for price to tap in, start producing us with bearish structure. As soon as we see bearish structure and a displacement, I will place my position, keeping my stop loss as tight as possible, and then I will ride my take profit all the way down to this level of demand here. Now, this bullish move coming up could take a day, 2-3 days, and it is about 140 pips worth of a move. So arguably you could be a buyer in this market up until this area, but that would be trading against the trend, and we don't want to really trade against the trend because anything can happen. You always want to be trading with the trend, as that's the safest option. So I will be holding off from placing any buy positions, but if you were looking to place a trade on this pair immediately on the open and maybe the first half of the week, I would be looking to buy into the market. And then once we see a tap into this area and we start seeing some displacement and price basically breaking lower, that is when I'll be looking to place my sell position, and I'll be wanting to ride it down to this previous level of demand here. So the last pair that I'm looking to capitalize on this week is the Great British Pound to the Japanese Yen. Again, we have seen price rally up, tap into a level of supply, and now we have seen breaks in structure, displacement, breaks below the neckline, and we are wanting to basically see this continue through to our point of interest. Now, just zooming in slightly, just to make it a little bit easier to see, in order for me to jump in on a sell position on this pair, I would want to see a break below this neckline here, as this would confirm bearishness, as all these previous lows will have been broken. Now, assuming that a new lower high gets produced, that will be my confirmation to enter in on a sell position. And just to show you how I would like it to look, so we'd want to see an initial break below this point, price to then come back up, not quite breaking this high, and then go on to set a lower low. That would be our confirmation of bearish structure and its next leg down. We could then expect this low here to be broken, setting a new low here, or somewhere over this region, coming back up, failing to break this high, again confirming bearishness, and then going on to take its next low. This is your typical lower lows and lower highs, which scream out bearish structure and scream out sell positions to me. But in order for me to enter in on a position, I would need that break below this neckline. So just to summarize on today's analysis, I've gone through the Great British Pound to the US dollar, the Great British Pound to the Japanese yen, and then I've gone through the New Zealand dollar to the US dollar. My bias for all of these is to sell into the market. I am biased to a sell. I do often look at sell positions, and I feel like naturally I look for those sell opportunities, whereas my vision should be a bit less focused. But as I seem to capitalize more on sell positions, that's what I look for. With both the Great British Pound to the US dollar and the Great British Pound to the Japanese yen, we have set alerts, and we'll be looking for breaks in structure and confirmation to jump in on these sell positions. These aren't positions that I'm looking to enter in on straight away. We will need to look for added confluence and that extra confirmation. As soon as we have that, we will be jumping on those trades. Now, another tool I love to use when looking for strength in currency pairs is the Forex heat map. I think it helps me tremendously, and it gives me another piece of confluence when looking to trade on certain pairs. The Forex heat map basically displays a visual overview of the Forex market's price action by organizing data from 28 currency pairs into color coordinated results. The strongest currencies from each specific time frame are marked in green, while the weakest are marked in red. So just going to our New Zealand dollar USD pair that we were trading on the back end of last week, we can see that the New Zealand dollar is very weak across the board. The US dollar also is quite weak, but it's stronger than the New Zealand dollar. So that acts as a piece of confluence to our sell position on NZD USD. So if you do want to take advantage of this tool, head over to the LAGFX website. We do have a trading floor page just under the client area tab. So if you hover over the client area tab, you click on the LAGFX trading floor, it will take you over to this page where you're able to analyze the markets, do as you please with that. And just below, you'll see the Forex heat map. And then if you are into your fundamental analysis and you want to keep up to date with fundamentals, you just scroll down again. You will be able to see all high impact upcoming news that could affect the markets subsequently. Personally, I think this is a great page just to look at, as it has extra tools to help you throughout trading. And if you have any suggestions on other things we can add, then please by all means drop them in the comments. We are always looking at ways of improving our website along with the things that we provide to our clients and the people that follow what we do. Now that does wrap me up nicely on my section of this Sunday Sessions video. What I'm going to do now is pass you over to James, our head analyst, and he is going to guide you through the pairs that he is looking at and explain exactly what he is seeing and what he wants to capitalize on in this coming week. Now, just before I go, I just want to say a massive thank you for watching. If you have enjoyed the video so far, don't forget to give it a like. And if you do have any feedback, please don't be afraid to put it in the comments below. All these things will help us improve and grow as a business. Now, without further ado, I'll pass you over to James.
Thank you, Luke. So I'm going to go through some of these markets myself using my strategy, go through some of the analysis I have done and some of the predictions I have for price in this coming week. So on the screen, starting off with XAU to USD, so the gold market. The reason I've come over to this is because I've been waiting for a longer term trade now on this market for a while. So we know that since around August of 2020, we hit that market high. We hit that peak, we created that swing high. From here, the market pretty much just bled out. It kept delivering us with bearish structure. All it was doing was protecting the highs and breaking the lows. And we continued with this. But in this region, you see that price was really struggling to make those moves lower. However, I thought that considering we have all of these lows representing liquidity, and then on top of that, this level of liquidity around this area of 1677, I figured that we would at least just continue this bearishness until we managed to blow through and clear all of that liquidity. I thought that from the minds of the smart money operators, from the composite man, that would be the most logical thing for price to do moving forward, because it is very rare that we see all this liquidity get built up and then not see it get manipulated, blown through quite soon after. So the reason, as I said, that I've come over to this market is because we've recently had an invalidation. So even though we weren't putting in these big structural swing lows, even though we weren't surpassing the lows and continually running the liquidity lows, we were still creating lower highs. So that was telling me that price was really, really struggling to actually move much higher in this market. And I thought that what we would have to do in order to make that move higher was to run some of this liquidity, because through manipulation such as that, we are inducing people into the market, but then we're also injecting momentum through the manipulation process. And I thought that if we were going to make these moves higher, considering that price has struggled to do so in the past, I thought we'd have to make that liquidity run first, and that would pretty much enable price to make that move. However, you'll see that this week and the last, price managed to actually blow through that invalidation level. So as a result, medium term, I am going to be looking long. Now, in my eyes, there isn't actually anything unmitigated now to the upside. You see, all of these moves came to mitigate the swing highs. So nothing within this region up to 1968 to me is unmitigated. So if price is going to make a move higher, which it has shown signs of doing through the invalidation, in my eyes, the only logical reasons is for it to come and either surpass this point, the market high, or try and mitigate some of the areas within this region. So just looking at simple market structure, this is giving me early signs, not a great percentage chance of confirmation, but early confirmation that we are going to see a bullish market for some time to come. As a result, we want to try and get involved on some long positions in the off chance that my story, that my presumption there is correct, because if we can then get in on a buy position, we can look to try and ride that all the way up, profiting massively. So the reason I've highlighted the area here at around 1840 is because we have a nice sell to buy. Straight after the sell to buy, some market inefficiency. I'll zoom in a bit more so it's easier to see. You'll see that we do have some market inefficiency between this region. So it would be nice to see price trade back down, fill in that market inefficiency, find enough demand to make that next move higher. So I've got my alert set at around 1840, and that is all I'll be waiting for on the gold market. Now, the next market I want to come on to is the dollar yen. There's a lot of updates for this, and it is the pair. Pretty much the only pair I've been looking to trade in the last week. The reason why is because it was delivering pretty perfect price action. Now, I included this in last week's session. You'll know that we managed to take this position after we tapped into a long-term supply zone. After making this move lower, I believe my prediction was for price to trade back up, which it has done. It traded up, mitigated this wave. However, I did not get in on a position at this point. Instead, what happened is price started trading lower. You see that we then moved up into a new supply zone that I had identified in here. We distributed. I was waiting for the displacement of this protected low. We saw that with high volume. We traded down, and then I found an entry through the mitigation of a lower time frame supply zone. We got involved. However, we were very, very unfortunate because you see these wicks right here. They came to pretty much stop us out on the pip. So exactly where my stop loss lied, it tapped me out. So that was just really unfortunate, but it does happen. Had it not, obviously we would be profiting very nicely from that now. However, moving forward, on Friday in the last week, I noticed we had another supply zone that I was hoping for price to trade up into. You'll see that price did exactly that. It traded in. I got alerted and then waited to see signs of entry confirmation. I saw this distribution. Again, I looked at this protected low, wanted it to be broke. The protected low was broken. Again, identified a supply zone. Once we tapped in, I used the 15-second to show signs that supply was being entered when it tapped this zone. We got those signs. I entered in. I partialed at these lows at 3 RR, so secured 1.5 RR back, moved SL to entry, and then was taken out. So from here, even though we did actually stop that trade out that I was involved in and break this high, we're going to have to see what happens, because pretty much if price surpasses the 114.975, so this previous low, it's going to continue the bearishness, I would imagine. However, if price surpasses this high at 115.177, it would then be signs that we're going to be bullish. If we do go bullish, it would make sense to me, because we may be wanting to come back up to mitigate this position up here. The reason I'd imagine we'd want to do that is because, as I said, when we had that high volume push on the 16th, we left a lot of market inefficiency. So it could be nice to see price actually trade back up, clearing these liquidity highs, running some of that liquidity, mitigating an obvious unmitigated position up here. If that does happen, as I've got an alert set there, we would then hopefully be able to get in on another nice sell in this market. So quick update over on the US oil market. So price has traded in to a long-term supply zone. So this supply zone pretty much marks the last time that price was ever up at the $90 to $95 a barrel region. We have a nice unmitigated supply zone in that region, as you'll see, between about 90 to 107. That entire region is classed as unmitigated area. So it would be nice to find signs of a distribution somewhere within this region. If we get those signs, trying to then get in on a sell position, either down to this demand zone to continue the bullishness we're in, but because we've hit into a long-term supply zone, I believe that's the ultimate upside target completed, and therefore I would like to see price surpass this demand zone and trade as much lower. So if we can find entry confirmation around this region, as you can see, it could appear that we have entered the initial phases of a distribution, being a buying climax, automatic reaction, some secondary tests in this region, trading up to an up thrust. So we need to see, as I've got my alert set at 88.5, I want to see price surpass this line. So let's say we were to see price from here come lower, past that line, we then want to see price trade back up, get in on the last buy to sell demand supply zone, find a distribution, and then ride that all the way down. So that's my outlook on the US oil. And then last but not least, we are going to end on Bitcoin once again, because it's finally doing what I wanted it to. You remember it traded down into that demand zone. We came up, we displaced the previous, what should have been a protected high, were we to continue bearishness. We displaced that, giving early signs of bullishness. After we saw that displacement, I said, right, this is our last sell to buy. This is an unmitigated demand zone paired with a market inefficiency, giving it a higher probability that price would want to come and mitigate it. Price is just approaching that now. So if we can find signs of an accumulation in this region, I'd be looking to enter some long positions, riding that all the way back up to the top of the market to surpass the previous swing high in order to fulfill this longer term bullishness that we once had in the market. So that's my outlooks on the markets for this coming trading week. Make sure you get some of those alerts set that I've talked about. Make sure you use the information I've provided to go to the market yourself, do your own analysis. I wouldn't advise just trying to place trades or even using what I'm giving you as financial advice, more just looking at it as my story, my prediction on the markets. Try and understand where I got that prediction from. Go to the market yourself, use my story, compare that to your own. If you get the same bias, by all means, hop on those trades. But regardless, as always, we will be updating these trades or these predictions as they play out. If they actually end up tapping one of our zones, one of our points of interest, we update this in our clientele group chat. We also throw some further analysis through into the Learning Lounge. So if you're not involved in that now, make sure you go and check it out. The link is always in the description. It also pops up in every single video. Make sure you don't miss out on this opportunity, because I'm telling you, it's a game changer. Without further ado, thank you for watching this week's Sunday sessions. We'll see you next week when we're back here again, analysing the markets.